You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, let's do it. Time to dance, time to talk about some of them, their options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so around these parts, the Options Insider Radio Network. Lots of fun stuff hitting the network. Hope you guys have been enjoying all of that goodness. We do it for you guys. At the end of the day, I've been talking up a storm, hither and yon, all over the place, various conferences, way down south, back again to Chicago, and everything in between. It's still unfolding on the network. It has been for some time. As well as, of course, hope you had a chance to check out all the panel audio we had from the OIC conference in particular, also from the Swan event there as well. So a lot of great content. If you can't make it to all these events, you don't want to shell out the money or the time, or maybe you're not in the business, but you want to hear about it, we got you covered. It's all there on the network. Hope you guys have also are enjoying the brand spanking new TheOptionsInsider.com. If not, let us know. Or if you are, let us know too. Let us know what you like. We like to hear from you guys. And joining me on the show, let me start with who's not joining us. Good old Uncle Mike. I guess the weather shield has broken down out there in St. Charles. Will not be joining us on the old program today. It's just a little bit under the weather. I think he enjoyed a little bit too much of Skippy's Gyros and Lemonade since our last show. Hopefully he's rallying. Hopefully he's listening in absentia and cheering us on as we keep rolling. But our well wishes out there to Uncle Mike. He's been a loyal stalwart. He hasn't missed that many over the years. So he must be really ill to not want to talk to you guys, not be able, I should say, to talk to you guys. But we got an able crew standing in, including holding down the hot seat. It's the most difficult, it's the most challenging, it's the most uncomfortable seat on the show. Yes, it's the Fidelity hot seat, where we are joined this week by Brian Isabel from the Active Trader Strategy Desk. Brian, welcome back to the show. How's that chair? Is it you getting a little more comfortable? You getting a little more used to it now?
It's very comfortable because we have the Empress, the last Emperor, sitting in it, warming it up for us and keeping it cool when it gets too hot. So it's very comfortable at this point.
Yeah, it's funny. Last Emperor, he kind of that nickname writes itself. Trey kind of comes with his own nickname. So you got two of the guys already have nicknames. We need to work on good nicknames. We need to get a sense. We need to get a feel for what the appropriate nickname is for the rest of you guys over there. But we'll get there in time. Meanwhile, though, keep enjoying that hot seat, sir. We're also joined, I don't know how hot or uncomfortable his chair is. He's always fallen off of it, so maybe it's not that good. We're joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Don't worry, listeners, if you like the Rock Lobster, a little birdie told me you may be getting a twofer of him today. Is that correct, Mr. Rock Lobster?
Apparently, I'm so popular on your network, I have been asked back twice in one day. It boggles my mind, to be honest. Just pure boggling. I feel I'm honored and humbled by the request.
There you go. See, a little humbled. So if you like all the things he talks about here, volatility, equity fund, all that good stuff, we're going to get into a little more of it coming up in a little bit later today on TWIFO, getting the futures options angle for it. Maybe I'll drive him into the weeds a little bit, listen, make him talk about corn or all sorts of fluid milk. You never know what's going to come up on that show, so stay tuned for that one. Meanwhile, it's time for us to keep rolling on this show with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right. Well, kind of the ongoing saga that is the trade war continues to captivate and terrify in equal measure out here as we're seeing today's action. A lot of it, pretty much all of it, except for the vol space, is on the red, on the downside of the screen today. Most of the major indices off and selling off pretty hard. We've got the Dow and S&P both off right around 1.5% right now coming into showtime. NASDAQ leading the charge to the downside. Not quite 2%, but getting close there. Off of nearly 1.9% there on the day. So a lot of blood in the water. A lot of unhappy faces, at least on the bullish camp. Not unhappy if you're a vol bull, of course, VIX cash, getting on up there, getting a lot of that juice back, getting up to today. It just shows how much these things are moving. You know, not too long ago, it was 16 and change, pretty much unched from our last level. We all know, of course, since our last show, it dropped off significantly. And then it all came roaring back today. Now we're up since our last show. It's about 18 right now out there in the VIX cash. So we're talking up about almost a handle and a half from where we were this time last show. So the vol giveth, the vol taketh away. A lot of things going on out there. They keep twisting that knife. They keep ratcheting it up just when we think maybe cooler heads, saner heads are prevailing. Nope. Here we go again. Throwing more oil on the fire that is the trade war. So all of you who've been betting for a nice, quiet return to some lower levels of volatility, at least for the foreseeable future right now, at least for today, let's say. That's about all we can foresee, at least for today. Not exactly happening. Mr. Rock Lobster, we'll start with you because vol is kind of leading the tape out here today. A lot going on. What's catching your eye? What's lighting up the tape for the crazies out there, sir?
A couple things. We did have Tesla was lighting up the tape for a while. But from the vol space, what I will just say is this. This is the same type of vol move we've had over and over and over again with this trade war thing in the last, 3 weeks. You're getting a fairly large move in the SPX, so like a 1.5%. That equates to a 24 vol. And VIX is trading 17 right now. So remember, the VIX is 30-day vol. It's not 1-day vol. It's 30-day vol. So you have the vol traders are not quite getting all into this move. I think, we go up, we go down, like 2,900 is the new, resistance, whatever, line in the sand. Where's Tucson when I need him? I was looking for some ideas for our vol newsletter for that very reason. All we're going to do is orbit around here. 2,800, 2,900, maybe we go lower. But it's looking like, even though we're trying to press lows, so we'll see what happens today, actually. It'd be a little, at least the vol is not really taking this move up. So what I'd say is, volatility on the June 7, it's 16.5% right now, average for the June 7 cycle. And that is a pretty good amount of vol. And even to May 31, the vol's 17. So I would just say is the market is not fully pricing this move yet. I would have thought at least the May 31s we would see a little bit more, but we really don't. I mean, even the weeklies, discounted for the 3-day holiday, you have the May 28th cycle is 1485 and the May 29 is 1601. To me, all of that looks a little bit inexpensive relative. I think you could easily see, a 50 handle move next week if everybody likes the news. So I think it's super reflective of what's going on. I think China has found the tweet button and they're using it. And that's that. And I don't think it's going to stop anytime soon until this whole thing is done. So, and I wrote a blog yesterday. I think you got short term, unless you can just trade the vol up and down, you're going to have a lot of bouncy markets. But I think there are bargains out there, but from a vol point of view, VIX move is still underwhelming. Basically, we're having a little bit more vol, but they're not buying into the fact that we're just going to start cascading, at least not quite yet.
Does seem like that, the move underwhelming, underpricing what is going on. It is, you are in these weird times, listeners, where, of course, a tweet or two, an aberrant tweet or two here or there in the ether can send us spiraling in one direction or the other. Oh, it's all upside. It's all good. It's all behind us. Let's rally. Let's annihilate vol. Oh, no, here it comes again. So I know a lot of our listeners, particularly a lot of you who lean to the dark side, particularly on the vol space, like to see a little bit of vol coming in. A little bit frustrated probably today that it persists and will not go away just yet. Brian, obviously the phones are probably lighting it up over there right now in Fidelity land. What is lighting up your personal tape over there, and what are people calling up about over there in Fidelity land today, sir?
Well, no real big surprises here. It's all pretty much the same themes that both of you have discussed already. It's the trade talks and tariffs and trade war related. So Tesla's coming up a lot today. It's actually hit a 52-week low today, and actually hasn't even been down that low since December of 2016. So big day, but it's off of those lows now. So that one was coming up quite a bit. Interestingly enough, I normally don't see this all that often, but SPY is in our top names being traded by Fidelity customers, and also all the chip makers. And obviously that's related to this trade talk and Huawei and all the trade tariffs back and forth between the U.S. and China. So we're seeing and hearing a lot about NVIDIA, Qualcomm, AMD, in addition to the usual standouts, Amazon and Apple, who frequently make our top 10 list here. So mostly trade related.
Yeah, that does seem to be leading the dance out here. Speaking of all things out here that are leading the dance, we got to get back to our old friend Tesla. Some people's friend, some people's enemy. I think today, not just today, this past week. I'm sure this is lighting up your tape over there as well, Brian. I'm sure people like it on a quiet day when the market's unched, let alone on I shouldn't say like it. They trade it. They hate it, they love it, but they trade it. And a day like today, when it's moving, rocking, and rolling, they certainly are probably calling up about it again. Seeing Tesla today actually unched, a rear unched day here for Tesla, or slightly up, actually, I should say, up but nearly one handle, right around 193, so well below that 200 level. We talked for a long time here on the show about the 300 level, how important that was, how so many of you were drawing aggressive lines in the sand via puts. I get a lot of your email. I see all your feedback. A lot of you like that level. Hopefully you've been judicious in your levels since and we're rolling aggressively, or maybe, keeping your powder dry a little bit as this move has hopefully not engulfed too many of you. But well off. It's off about 27% in the last month, off pretty much well over 100 handles from that mythical, magical 300 level, right around 193 and chain, 193.75. We'll see what was the high on the day today. Got up to actually, it was like 197 or so, in that range, 197 and a quarter. So it had more upside before coming off. But it's been just a series of bad headlines here for the better part of the past week. We've seen just downgrades, price warnings, all some ridiculous downgrades. I guess someone out there is looking at the options open interest because we've talked many times about the 50 strike, but also that crazy 10 strike, right, listeners? I think wasn't the meatball on here not too long ago talking about a 1x2 around the 10 line in Tesla puts. Well, it looks like an analyst has been paying attention to that level because he cut his not his overall price. That's what makes these analysts. That's why the whole analysts. That's why we take such a dim view on them, listeners, because they're talking out of all sides of their mouths at the same time. This guy from Morgan Stanley getting a lot of hate back at him because he cut not his estimate, but his worst case. They have like 5 different estimates for the stock, which is what's the use case of that? Here's my 3 different prices that what could happen for Tesla. Gee, thanks, guy. But one of them, he had his worst case scenario used to be 97. He just cut it to 10. Probably because he wants people like us to talk about him, but I don't think it's working out the way he thought because he's getting a lot of hate on this one. But still, just he obviously maybe looking at a little bit of the old OI and deciding, maybe 10's a good price. So it's about a $200 stock. His worst case scenario used to be 97. Now it's down to 10. Either way, the options are reflecting, shall we say, a not overly bullish sentiment. A lot of size going up out here in our old friends, the mystery puts. In fact, they are leading the OI yet again. Looking at the top 10 positions out there in Tesla right now, we've got the June 50s. That's what's great and kind of crazy and kind of mystifying about these is that we get the Jan, we get all that stuff, but the number one position in Tesla right now is not the Jan 50 puts, listeners. It's not Jan 2021 or 2020, anything like that. It's June. It's next month. It's the June 50 puts, and the best part is they persist. They continue to trade. One of the biggest trades of the week, maybe the biggest trade of the week. I'll have to go compare, but it's certainly one of the biggest. Were the June 50 puts going up 15,000 more times for 4 cents. Lift in the offer, listeners. That went up. When was that? Last Friday. It's about a week ago. And almost 10,000 of the 40 puts traded about 4 cents this week as well. So 10 handles lower going for the same price. Interesting stuff. That went up this Wednesday. So deep downside puts in June. Not even September, not Jan, June. Continue to dominate the tape, which maybe shows you something. Maybe this analyst is hedging his bets, pun intended. But yeah, that's the number one position out here in Tesla land. Number 2 is our old friend, the mystery puts out in Jan. They're Jan 2020 now, as of course the old ones were Jan of 2019, I do believe. But still, Jan 2020 50 puts number 2, 54, almost 55,000 of those. Number 3, the Jan par puts, about 43,000 of those. Number 4. The Jan 10 puts, all the way down to number 4 now. So someone's been looking at the OI when he's been making his analyst predictions. 37,000 of those bad boys. And number 5 of the top 10 are the June par puts. So back to June again, about 31,000. You got to go all the way out. There's only actually one call in the top 10. It seems somewhat optimistic at this point, given where we are right now. But still, it's the July 270s. Given how Tesla moves, it's not completely out of the realm of possibility that those bad boys can come to fruition. 22,000 of those open right now. That's pretty much the only call we see anywhere in the top 10. And we've got actually Jan 200 puts, or number 7, for about 21,000 of those. So those are looking a little bit in the money right now. Interesting how the worm has turned in Tesla since the last time we broke down the OI. About 2.25 million contracts outstanding, about 800,000 on the calls, and about close to 1.4 million or so on the puts. Mr. Rocklop, so you mentioned your crazies out there in the pit chat were slinging themselves some Tesla. What are they up to out there? Are they just harvesting the old risk premium, or what are they doing?
Actually, what we've been doing, mostly put flies, just you can leverage them really easily by, let's say, buy 10 put flies and maybe one call. So it provides you with, because Tesla has, like you said, that annoying habit of you blink and it's 2:30 again. So it actually tends to gap harder than it goes down. But you buy the put flies, fairly wide, like 30 handles wide. I closed some early this week. That's basically what people have been looking at. So it's just kind of it's sort of like a negative grind on the way down, and that's how they're looking at it. They're actually not buying some dead straight options. So I still think that's if you want to watch it and trade it. That still seems to be a reasonable thing. I have seen a lot of stuff in like Facebook chat boards and stuff like that for option trading. There has been some equity margin calls.
Yeah, go figure. When you blow 100 handles through the level everyone was writing, right? Then they're going to get a call from your broker.
So there is that. I mean, that pushes things down. It is possible that Elon Musk, he has that rich guy disease where, you've got all this stock and you've got this massive capital gain on the stock, and then they use it as, collateral for loans. You guys remember like a CHK? That guy was at Aubrey McClendon. He did the same thing. So he could buy more natural gas and the price collapsed. So probably Musk is smarter, but, to be honest, at least right now, I think Tesla will finally find kind of a price that's a little bit, a little more reflective of, yeah, they're a growing company. They have great growth, but, it's just how much is a car company worth, right? Everybody keeps thinking they're something else. They're this company, they're that company, but ultimately they're a car company that makes $45,000 cars. So it's certainly, it's green, it's great, it's all that stuff, but maybe the price is starting to reflect a little bit more of the reality. Could the guy keep getting funding for what he's doing? I think probably, and they're not very far away from profitability as far as that goes. So, but was it worth the value the market had on them? It was priced for perfection, and they're not quite getting perfection. So anyway, downside, I think put flies and stuff like that. Can the stock go to 150? Sure, why not? It could be there next week if enough people lose confidence in it. So I think that kind of a trade, I mean, you're looking for the thing to move. So, on balance, I'd say you plan for the grind down and you hedge for the gap up. And that's the way the stock pretty much trades. And just at least from what I see, that's what people are doing. That's what I wrote a blog about a couple of weeks ago. It will look incredibly prescient to anybody that reads it, but that's what's going on. So,
yeah, I'm just fascinated that the OI on these crazy garbage mystery puts in June continues to grow, and they're not what you're talking about. It's not flies or other things or spreads or 1x2s, anything like that. That might make a little more sense. It's just straight up put love for size, and it goes out in a month. So yeah, I'm trying to imagine the scenarios in my head where Tesla is at 50 by this time in a month. It could happen. Crazier things certainly have happened. It's reminiscent of the old Enron days, how they kind of just melted. I'm not saying Tesla is Enron. I think maybe one of our listeners may have suggested that a little bit later. We'll get to that in a bit. But just the speed with which they collapsed towards the end there, maybe if it got down to 50. Also, the question too is what is the oft rumored buyout price, right? Everyone's always talked about take your pick. Apple, Google, all the big tech names. They're all going to scoop it up, right? Once it gets to a certain level. What is that level? Is it 10? Is it 50? Is it beyond? Who knows? But interesting stuff out there. You mentioned, Brian, earlier that the Fidelity folks were kind of lighting up Tesla. What are they up to out there? Are they coming in en masse to just get long the stock? Are they bullish? Are they looking at bullish strategies in the options? Are they selling puts? What are they up to out there, Brian?
Yeah, so with Fidelity, we do have a pretty wide, diverse group of investors and traders. So we do get a lot of everything. But I can tell you right now, just from the stock side, there's actually a bit more on the buy side, but it's about 53% of the orders have been buys versus 47% of sells. So, yeah, that is indicative, really, of the overall picture of Tesla from what we see and hear from people calling into the active trader strategy desk. For the most part, it all kind of evens itself out, right? All the positives get evened out by the negatives, so it ends up being like a delta neutral strategy.
Yeah, that does happen a lot. That's why this stock is so hot, right? No one doesn't have an opinion on it. They love it or they hate it. It's very few people who are neutral. And that's kind of reflected in the OI there, right? In the trading volume. Both sides lighting it up pretty much equally, which is, you're right. That's the tail of the tape on Tesla most days. It's not heavily biased. It is dominating the tape today, top of our most actives, number one, pretty easily, pushing up 500,000 contracts today. Their ADV is 350. So they're doing well north of that. Number 2, Apple, 390. Number 3, Baba, 205,000. Number 4, GE, $1.56. Number 5, Bank of America. There, we'll just do the top 5 for today. Let's do number 10, number 9, Facebook and Amazon. There you go. You want to get those guys in there too. So the top 10, a lot of the names you might expect, but maybe mixing up the order a little bit. Someone managing to roust Apple out of the number 1 position for a while. In terms of the big indices, not as much on the tape as you would maybe think, given how active it was. Again, these are kind of coming up before showtime, so they're a little bit larger now. But still, VIX only doing a little north of 200,000 contracts as of the start of the show, about 220 or so. So the ADV is over 700,000 out there right now. So a day like today, market's moving 1.5%. You'd think you'd see a little more paper out there, but then again, it also is indicative of the fact that we've seen this dance before now. Markets have a very short-term memory. If you haven't seen a 1+% move in a while, then they start getting a little funky, a little wonky when we see these things out there in the space. But when it's just when it has happened, and it has happened recently, then all of a sudden they start to get a little bit inured to these types of moves here. SPY doing about 1.75 million contracts. 2.91 is the ADV. SPX 6, about 700,000 almost on the tape today. ADV about 1.3 million. The Qs 427,000. ADV pushing up on 800,000. And the big mover today, the Russell, IWM at least, 357,000. That's north of their ADV of 300,000. All right, we've been talking a lot of trade, and we got to keep rolling. It's time to get on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, listeners, it's that time again. Time for another live rendition of the Odd Block, where we just break down what we're seeing here and analyze it for you on the fly. It's kind of fun. It's like live theater here, the options version of it. I haven't seen these, so we're just going to look it up, and we're going to kick things off here. What do we got? What do we have here? Ooh, hot name. Lighting it up today. A name that's on the tip of everybody's tongue. If you want to talk markets, you talk S&P, you talk, a little volatility. Then, of course, the next thing out of your mouth, next ticker out of your mouth, it's Golar LNG. Of course, the name gives it away. This is a liquefied natural gas shipping company registered in Bermuda, if you were interested where they're registered. Ticker symbol GLNG. Trading today about $19 even, off nearly $1, nearly 5%. So not a good day here for GLNG. Let's look back over the past year and see what's been lighting up. A year ago, they were looking a lot better. They were trading about $35, right around at 34 and change. Then looks like they sold off. That was a very brief flirtation with that. That was in May. They're at that level. Then they sold off almost immediately by the end of May, the 31st, to about 26. And then they kind of vacillated in the high 20s for a while before getting back down to 23 or so by August. And then they kind of bounced from like 23 to 29 for a while before trending lower again. And starting the year kind of around that low 20s level and continuing to just drift ever lower to where we are right now, 19 and change. Not quite the bottom of that 22-week range, but pretty darn close. The bottom is 52-week range, I should say. But the bottom is 1836. We're at 1906 right now, so pretty near the bottom. Let's see what our options paper is lighting up given where we are right now. Today we saw 8,043. I figured it might be some calls, and that's exactly what we saw. The DEES, 22 halves, going up for $1.45, 8,043 times. Pretty much right off the offer. They were offered at $1.50, went up for $1.45. Opening on the old NOM, a.k.a. the NASDAQ options market. Of course, there's going to be some earnings between now and DEES. August is the next time they're up. So interesting. Open and upside call. That's a fairly meaty buy, but not terrible. You get all the way out to DEES. So obviously we need this bad boy to roll to about a 24 or so. From a break-even perspective, we all know if it shoots up in the interim, it's going to look pretty good as well. But either way, someone, Mr. Rock Lobster, wants this party to resume to the upside, and they want it to get rolling. What do you think here about some upside call love in GLNG?
GLNG. This used to be a hot trader. I'm going to say 3 years ago or something. Like a real active, I think the stock was in the 80s or 90s. of course, it wasn't one that I traded back in the day. I don't think it existed. Let me see. Yeah, I mean, it used to be a $70 stock in, let me see. Let's say we're going back a little bit. 2014. Man, I'm getting addled in my old age. I thought it was last year, but it was a while ago. I have to say, I like this as a trade idea. Of course, I can't just make trade recommendations, but I think, okay, the 22.5 calls, you've got December, natural gas, possible story, blah, 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 blah. I think this is it looks like a very reasonable call buy, gives you good leverage. And it's one of these stocks that could easily be there. So I think somebody is taking the trade wars and making a purchase. I don't think it's if you want to be long, perfectly reasonable way to get long with that much time. Vol is relatively inexpensive. So that's one of my favorites. You get a sleeper, what I just call a little bit of a sleeper stock. Low vol, nobody cares. Those options really aren't going to decay very much. And on you go. So I would approve of this as a way to get long the go long.
There you go. Get long the go long with some D's calls. Yeah, you're right. It's not terrible. It's not fantastic. It's kind of a fairly standard use case for a name that's been beaten up in the odd block. But interesting enough, if you like this name or if you've been watching it since 2013, like the Rock Lobster, hasn't been on my radar, but clearly the Rock Lobster has been tracking it aggressively since 2013. So if that was a little bit rich for your blood, that $19 and change, we got you covered. Hopefully, good thing the Viceroy's not on the show anymore, Mr. Rock Lobster. And if you're listening out there, Mr. Viceroy, cover your ears. You're not going to like this next one. We're going cheap. We're going cheapy business here. It's, of course, yes, everyone's favorite, Danbury Resources Inc., ticker symbol DNR. This is, if you're wondering, they are engaged in hydrocarbon exploration. I love the grandiose company descriptions. Let's see. Trading today, brace yourselves, listeners. $1.58. Yep. $1.58. This is going to rekindle all sorts of discussions about cheap options, but we'll get there in a second. A year ago, it was looking a little better. It was trading $4.33. Got up to nearly $7 there in October, about $6.75 or so. So things were looking pretty good for good old Danbury. And then, of course, they weren't. So, right, pretty much at the tail, not even the tail, like the middle of October, before even the big broad equity sell-off started, it just started really turning, the worm turning. By the time we got to the end of October, it had pretty much been cut in half from 630 down to 330 or so. So pretty close to it. And then it kind of just proceeded to drift lower ever since then. The nadir, of course, being Christmas Eve, but not that much lower than it is right now. It's only about 15 cents lower than where it is right now. So it hasn't really budged a lot over the last 6 months, which brings us to today. We're at $1.58 off another 13 cents. Not a good day here for Danbury, off 8%. So they're giving up the ghost. They did break 2 ever so briefly back in April, 256. So they did have a good run, I guess, for a little bit there, but they've since given it all back, given up $1, given up a good chunk since April. So what did we see out here in DNR? We saw some more, looks like some more call love to the tune of, you're going to like this, Mr. Rock Lobster, 3,302 of the SEP 1/2s. So pretty much at the money calls going up for a whopping 35 cents. 35 cents, pretty much lifting the offer. They were 30 at 35. This is all opening, as you might imagine. Then we saw more. That wasn't the end. That was just the beginning, listeners. Then we saw 2,500 more going up for 35 cents. Then 2,500 more. Total of around 10,000 of these bad boys going up for SEP 1/2, which in and of itself is kind of interesting. That kind of brings up the question of, at that point, would you rather spend 35 cents for September or $1.50 for forever? That's a conversation we could clearly have. But then also worth noting that wasn't the only thing printing out there today. Looks like about 4,000 of the July 1/2 puts also went up in blocks of about 1,700 was the big block for 15 cents. That was on the bid there, 15 cents at 20. They kind of kept printing the whole day, though, for 15 cents. Another 500 is over 15 cents a little bit. So right around that same time, a little bit later, 500 more for a dime. So they were hitting bids out there. So then 15 cents lifted off a little bit, but they were offered there. So take that with a grain of salt. So maybe a little bit of a funky time spread going up, 4,000 or so of those on the July puts versus 10,000. Call it a funky time spread, funky time risk reversal. Call it what you will. Not really. Oh, it is a diagonal. 20. No. They're 1.5s on both, so it's not a diagonal. It's just a trade up time spread. So a lot of funk out here, Mr. Rock Lobster. So a lot of ways we could parse this. First off, 35 cents on a $1.50 stock. I think there's something to unpack there. And then B, what do you think this put leg is up to here, sir, versus the calls?
An interesting trade. I have to say, like, this is another one where, it's a company that never really recovered from the oil crash. It was a $18, $20 company, way back then. And ever since then, it's sort of just been on life support. So it kind of a weird one. You look at this and you go, okay, somebody wants some calls. They want to whack out some puts. It's actually kind of reminds me that, that get long, go long trade where it appears that, somebody wants to just get along this thing. Now, was it better just to maybe buy, 240,000 shares? Don't know, unless they're expecting something. So this is one of those, like, these natural resource companies, I don't really understand them. But I mean, you got to look at the leverage of the trade, and you're like, okay, well, they're going to sell these July 1.5 puts. So clearly, I think they have in mind what you want to do, just go buy the stock. But if they don't get it, they're going to get their SEP calls for cheaper. So it feels like all this paper is related. I think these call buyers and put sellers, I mean, I can't help to think they're not at least cousins somehow.
Yeah, it would be a strange bit of an aberration to have 10,000 going up here and 4,000 going up in a stock that prints not much options in terms of volume, and then have them be unrelated. It would be strange. Stranger things have happened. But yeah, a bit of a funky one. Time combo, you could call it even. All sorts of weirdness going up. The 15-cent puts are kind of an interesting wrench in the works, but interesting nonetheless. Just the calls alone, yeah, good thing the Viceroy is not here to weigh in on that, because that would be deeply offensive to him. But the puts add an interesting angle, a little bit of interesting wrench. You know what I'm going to say? We're going to do it. Yes, we are. We're going to make these a to-be-watched category. We're going to come back to these bad boys and see how they fare, see if we can parse exactly what they were up to with the July puts, if they were rolling, if there was something else going on, if they were indeed trying to finance their calls, doing a bit of a time combo, if you will. We shall dig into all of that. Interesting one to keep on our radar. Meanwhile, we're going to wrap up the odd block with another favorite. If a $1.50 was a little bit too cheap, $19 was too expensive, how about we meet not quite in the middle, but a little bit closer to the middle? How about $4.50 or so? How's that float your boat? Yep, of course, talking about Washington Prime Group. This is ticker symbol WPIG, WPG. This is a REIT that invests in shopping centers. And a year ago, they were trading about $7.50, so about $3 north of where they are right now. They rallied all the way up to nearly $8.50 back in July of last year. That was kind of their apex there. Then it kind of was a long, slow drift to the downside. They got down back in the nadir of, at least for last year for them, $4.68 and on Christmas Eve. But as we know right now, they've gotten lower since. Rallying back up to about $5.70 in February before, and again in April before selling off to where they are right now, right around $4.40. So it's kind of been an interesting back and forth here in WPG. Let's see what our Eye of Sauron picked up out here. Pretty decent size here for a little name. This is 10,000 of the Jan 2020, so this coming Jan. 2 half puts going up for 15 cents. This is, of course, lifting the offer. Of course, this is opening, because these things, you're going to have to. I'm surprised I got it all done for the offer. But hey, 10,000 of them going up for 15 cents, lifting the offer opening over there on the Gemini. So yeah, Mr. Rock Lobster, kind of interesting. This is the flip side of what we were just talking about. People always debate spending all this money on calls when the stock is cheap. What about when the stock is not quite as cheap, but still pretty cheap? It's below that threshold. A lot of people like me have, which is $5 is usually the threshold on where they start thinking about the stock versus the options. But what about paying 15 cents, Mr. Rock Lobster, for some puts on a $4 name. Does that float your boat more or less?
I mean, do you think these puts will ever pay?
I do
realistically?
Not by January, probably no. It's a bit of a bridge too far, I think.
I mean, the stock has definitely been on a one-way nasty roller coaster south for, I don't know, years, pretty much. And I guess that's because who wants to own a bunch of retail properties at this point? But it's, you've seen these before. To me, it's either the line in the sand put, which it doesn't appear to be, or somebody's just trying to, do like a margin reduction for buying stock. I think it's one of the two. I don't think it's a line in the sand, so maybe just somebody wants to load up on this WPG, call on the bottom of the retail, REIT thing, and on they go. So it's I don't know if it even pays a dividend. It does pay. Oh my gosh. Okay.
Yeah,
so this
22%, 22.5% dividend yield.
Yeah. Maybe somebody's doing it for that. I mean, how do they keep paying the dividend?
That is a worthwhile question. Given this chart, I would maybe.
Does this reflect the fact that all the value of their properties are going down? I'm looking at the yield like, wait a minute. So, I mean, to me, it looks like somebody like, okay, I'm going to buy some puts. I'm going to buy some stock. I'm going to get $1 in dividends or something or at least I'll get 50 cents in dividends till January. And let's just give it a whirl. What can we lose?
Yeah, I guess they're risking $2 on the stock. If the dividend is about 25%, it's going to be around $1, right? So it's pretty close. They put 15 cents of that back to work for the protection. I guess it's not the craziest trade we've seen. We've seen crazier. Once you factor in the dividend, you're right. It does make a little bit more sense. And at first blush, I was like, man, I'm surprised they got all this done on the offer 10,000 times in a liquid name. I'm sure the market makers are like, yeah, we'll sell them at 15. There's a lot of places to sell the stock on the way down between 4.5 and 2.5 before they start getting concerned, I'm sure. But still, interesting stuff here. You know what, Mr. Rock Lobster? I'm going to do it here too. I'm going to come back to these bad boys. These are going to be watched as well. They're going to be on our watch list. Long-term WPUG puts. Meanwhile, let's keep on rolling, see what you guys are watching, what you're into. It's time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block portion of the show where you guys take the reins. You ask us questions. A lot of times we like to turn the tables on you, too. Every week we take a poll of our audience, a little bit of a question of the week. This week we had a little bit of fun, a little bit of silliness coming off the heels of the finale that everyone appeared to watch, of course, Game of Thrones. We thought we'd ask you guys if you could buy calls on one of the characters to sit on the Iron Throne at the end of the show to win. So obviously, who would you want to win, quote unquote? We gave you 4 choices. Again, there's no spoilers in here. The winner could be here, it could be not. You don't know. We're just asking some fan favorites. Who did you want to win? And let's see. We gave you 4 choices. Tyrion, a.k.a. the Imp, Jon Snow, the oft-mentioned hero, quote-unquote, of the show, Daenerys Targaryen, and Arya Stark. And here we are. Oh, before I reveal the results, are either of you, Mr. Rock Lobster, Brian, either of you Throne watchers, did you watch the show?
I was definitely a Throne watcher.
All right, so did you have no spoilers, obviously, just from your own personal wish list, who did you, of these 4, if you had one you wanted to win, who would it have been? Or maybe you have a write-in vote, Brian.
Yeah, it's kind of tough. I think probably Arya Stark just for the out of left field factor. But if I'm being honest, I think probably I would have picked Jon Snow to end up on the throne.
Yeah, that's a safe bet. I did read somewhere that there were some surprise odds going in for some bizarre characters in Vegas before the finale. So people obviously knew maybe the game was afoot. That's the challenge. Yep. All these Hollywood Stock Exchange people have proposed in the past. Insiders, they run havoc with it, even worse than the equity space. Let's see, Mr. Rocklobster, I'm assuming you didn't watch the show.
I haven't been able to get into it. Mostly though, I like to know how to pronounce all these names.
That's part of the fun. That's part of the fantasy oeuvre, sir. You got to get into the names. Even though these names aren't as bad, there's guys like names like Ned and Jamie in this show, and Rob. So they're not too crazy.
Oh, really?
Yeah, it's a mix of fantasy and like guy next door names, which is always kind of fun for how Martin did it. But I'm with you, Brian. I probably would have picked, if I had to pick a populist vote, it would be Jon Snow, and he is indeed running away with it. 55%, my personal fun pick. I don't know if a revenge-obsessed sociopath maybe isn't the best choice to rule a kingdom, but I like Arya, so I'm going to go with Arya. She's my vote for Arya Stark. And everyone else is pretty much tied for second. It was pretty much coming into Showtime. It was at about 15% each. It's moved a little bit now. Now Tyrion and Arya are 14. Daenerys has bumped up a little bit to 17, but still Jon Snow running away with it. So there you go, a little bit of fun here on this silly week. Speaking of crazy weeks and crazy times, Brian, we're in kind of this weird scenario. Last year, of course, we saw rates were kind of hot and heavy in everyone's mindset again for the marketplace. The Fed was actually moving and shaking, raising rates, doing some stuff. Now it seems like maybe their weapons have been taken away from them. The global economy not exactly lighting the doors off. So the prospect of them raising rates again seems, at least in the near term, to be pretty low. But it still raises the question of, how do rates impact options? Things like all of a sudden our old friend Rowe coming back into the picture is what we haven't talked about in a while. I'm assuming you're getting a lot of those kinds of questions over there in Fidelity land. And if that's the case, Brian, what are you telling people about how rates can play into their options portfolio, sir?
And that's a great question. And it's funny you mentioned Rowe because it's probably not been heard of in, at least 8, maybe 10 years.
It's the redheaded stepchild of the Greeks, sir. It gets no love.
Absolutely. One of the things, so for listeners who maybe are unfamiliar with Rowe, because they probably haven't had a need to be, Rowe is basically gives us an idea of an option sensitivity to a change in interest rates. So how much the option contract will gain or lose if interest rates go up or down. The one reason why most people haven't paid much attention to it in the past is because of the fact that we didn't have any interest rate changes for, I think, 8 years, so no one had to really think about it. But even when we do have interest rate changes, think of how they normally happen. A quarter of a point here, a quarter of a point there. It's not like all of a sudden there's a 1% change in interest overnight. So when you look at how small Rowe is in general, and then you think about the fact that that's over an entire year, it has a very small effect on most options. And that's why when you don't have rate changes, no one really cares. But on the other hand, if you're trading really long-term options, maybe you're trading some 2-year-out leaps, and you're thinking that there's going to be a lot of volatility in interest rates over the next couple of years, you definitely want to be aware of that Rowe because it is going to have an impact on your option contracts prices if they raise or lower rates. So interestingly enough, I was just looking the other day at the WIRP function on the Bloomberg machine. Essentially what it does is it takes a look at the interest rates futures and comes up with a probability that the market's pricing in for a hike or a cut. And it was up to 80% probability that there'll be a cut within the next year. And the funny thing about that is at this time last year, it was an 80% probability that it would be a rate hike by the end of the year. So what a difference a year makes. And just goes to show you that interest rates and rate hikes and cuts are back on the table. So maybe it's time to add that column on your option chain that's titled RHO.
Yeah, it's back. The redheaded stepchild is back. By the way, listeners, of course, if you like to see that probability stuff on rate hikes and cuts, the FedWatch tool over there at CME, a really good one at kind of taking what the options market is effectively pricing in and what the futures are pricing in and breaking it down into relatively easily intelligible probabilities for everyone out there to enjoy. So we've got time for a few more here. Let's see. Gray coming in. Remember a while back, Rock Lobster, we were talking back in, probably like the late end of the year, beginning of this year, when Apple was at that nadir, flirting around that 150 level. A lot of hand-wringing. We asked our audience, hey, are you guys, I think we asked them out to July, so it was roughly 5 or 6 months at the time. Hey, what would you think about selling these 150 puts in Apple? Yes or no? And fairly close to half, if not more than half of our audience came up with some variation of no. Either they didn't want to do it or they wanted to roll from that strike to go down because they weren't comfortable being short that 150 strike, which to me was fascinating. It showed maybe how a bit of the sentiment had turned out there in Apple land. Well, Apple come into today off 3.5 handles, nearly 2%, shy of that 180 level now, 179.25, so 200, 210. A distant memory in the rearview mirror. Gray's asking us, hey, do you guys want to sell those Apple 150 puts now? Maybe not in July, but we'll see. I'll have to go see what those are up for right now. Mr. Rock Lobster, have you guys revisited this since, and maybe in your pitch chats? And I think he's kind of joking here, Gray, but still, maybe an interesting narrative. I know a while back you guys are looking at some funky spreads out there in Apple. Has the Apple downside come back on your radar again, sir? Or maybe some of your crazies in the pitch chat?
So I know it's funny. The last thing we did on Apple, Mark was on Bloomberg, I think on Thursday last week when he was in New York, maybe. And he was buying Strangles, the 80, I'm going to say the 85.90 or the 95.85 in July of all things.
He went on Bloomberg to talk up buying Strangles.
He did. And those Strangles right now are up 40% from when he talked about them.
I guess that makes sense for that audience, right? They probably want to buy premium and they want Apple. So you put those two together, they're going to love an Apple Strangle. Yeah.
So it was something we also, I think we looked at our Edge Hunter to see what looked like a decent.
Wait. You said it wrong. It's Edge Hunter.
The Edge Hunter, yes. So you could buy 24 volatility in July, I think, on Thursday. The volatility now is 31. So I think today would be a great day to hit the exit on all of that stuff. 31 vol is like earnings size. So, everybody's so worried about this China thing. I don't know. I just can't. I can't believe is. So the short answer is, I think there's better things to do than sell the 150 puts. I'm looking at July. Like, I think it would make an interesting 1x2 now, or like maybe like a 1-3-2 type of fly. But I mean, I think you want to sell some premium, but buy still at the money. I mean, there's nothing that says that Apple can't be a $200 stock again in 3 weeks. So I would sort of bend the fact that, like, okay, do 1x2 on the downside and maybe buy a call spread on the other. Something that almost like a risk reversal at this point. Make sure it pays you at like 160 if things keep going poorly. So I would just change that just a little tiny bit, just in case there is better news on this whole trade thing.
So not just straight up selling, blasting away 150 put, but more, let's say, buying maybe, I don't know, right around at the money, 180, selling 160, 1x2, something along those lines instead.
Correct. Yep, exactly. And then you buy maybe one call, so the whole banana pays you good dollars at 200, and do that in July and try to. Because that would keep your Vega number down to what I would call a reasonable number. Because vol is super high in here; it's as high as it's been all year. So, I mean, you're back to levels that we haven't seen since December, really. So you have to take that into a grain of salt. And you also the reason the vol is high is because things are nasty. But like 80-60 doesn't look that bad. You only pay $3 for that 1x2 in July, and you can buy a couple of junk call spreads. You can buy the 85-200 for $5, and you see where it goes. If it starts to settle and slide, you should be able to make a little bit of money. And worst comes to worst, you got the 80-60-40. You're buying Apple at 140. So that's a reasonable trade. If you want to get long Apple, but in the meantime it slides around, you can even make money if it sucks. So. There you go. Trade creation on the fly right here on the Option Insider Radio Network.
There you go, live and free. You guys must love that, listeners. But there's a lot of ways to be more nuanced out there. I know you guys like come out just blast away at strikes. I know, I get it. It's sexy. It's fun. You like harvesting that risk premium. But as you said many times during the show, you could be a little bit more nuanced on it. Something like that, like he's just talking about, the 1x2 gives you a little bit more runway to the downside. You got a little bit of breathing room if things go crazy, and you do pick up stock still at an attractive level, but you made some money along the way too, which is always kind of nice, right? And you're not also shelling out an arm and a leg in case things go crazy. Which, who knows? It could be back at 200 in the next couple of days. It could be below where it is right now, down threatening 160 or something. You never know. Crazier things have happened. Meanwhile, though, we have to keep on rolling here. I see your hate for Tesla, all you guys in the comments, but we'll keep on rolling. We'll get to your Tesla is Enron comments another day. We got to keep on rolling to our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block. It is pretty much the macro dance continues to dominate our radar. Of course, you know, the issues, what's going on with China, Chinese demand. If you want to talk about how that's impacting a lot of macro and a lot of commodity things and volatility, stay tuned for that in about half an hour for TWIFO. With a little guy you may have heard of called the Rock Lobster. But a lot of interesting stuff. Let's go back the other way. We'll start with you, Brian. What are you watching for the rest of this week into the weekend?
I am going to be watching out for maximum Memorial Day relaxation. That's first and foremost on my radar. So keep in mind, everybody, Memorial Day is Monday, so the market's going to be closed. But I'll be looking out, you know, like you said, macro world these days. Talks, China, Huawei, chip makers, pretty much the standards that have been dominating the headlines as of late. One interesting thing I'm going to be looking out for next week, Case Shiller's coming out. So, you know, we've had some news on the housing situation in the U.S. lately. So it'll be interesting to see how the Case Shiller numbers come out next week. So those are the most things, but really, I'm going to be heavily focused on Memorial Day for the rest of this week.
Focused on relaxation. Yeah, usually we did, that shows how much is going on. We didn't even talk about the long weekend and how that usually impacts the vol space. But it goes to show you, listeners, it's not always the same dance going into a long weekend. Vol can go up, and indeed does, when things are hitting the fan. Mr. Rock Lobster, same question for you, sir. What are you watching for the rest of this week into this elongated weekend?
I'm actually taking next week off, so I don't really care what happens. Actually, I do. I'm looking for see if we can actually make a new high in VIX, if this sell-off is real, or is it just more like algo-driven, kind of stuff. So you'd want to see VIX cash like 23.24 for that. So, I mean, ultimately, that's about it. This is all headline-driven, so that's what we got.
All right, and unfortunately, that's all we got for the end of this show as well, listeners. But before we go, let me go back around the horn, check in with everybody that listens and contributes, of course, to the show as well, and see what they have cooking that may interest you. And don't worry, if you like the Rock Lobster, don't worry. You got a double dose of the Rock Lobster scheduled for you today. But before we go, Mr. Rock Lobster, if folks are just hearing you today on the old option block, and they want to hear a little bit more, maybe they want to come see you in person in a little while, where should they go? What should they do, sir?
Go to optionpit.com or go to our Pro Summit. I think the first 2 days is sold out, but we got room in the second 2 days. So come and check it out. Go to Chicago, have fun, put some learning on.
There you go. Optionpit.com is the place to go. I'll be there. Maybe we'll drag Brian out there. You never know who's going to be there. So check it out. It will be fun. And Brian, same question for you, sir. Not so much in the live event space, but if people want to kick the tires and light the fires, as they say on Fidelity Options, maybe they want to talk to you guys on the strategy desk. Where should they go? What should they do?
Yeah, they should go to fidelity.com/options. They can take a look at what we have for options trading here at Fidelity. Of course, if they want to talk to us on the strategy desk, they can always call 1-800-544-5115 and ask to speak to Trey or the Last Emperor.
He's loving that Last Emperor, isn't he? It's easy. Now you know if they call up asking for the Last Emperor, you know exactly where they're coming from. So it makes it that much more fun. Fidelity.com/options, listeners. They made it easy for you to find. Kick the tires and light the fires. If you like what you're seeing, if you sign up for them, let them know we sent you. If you call up Trey and those guys or Brian, let them know you're calling from the show. That will certainly put a smile on their face. Don't let Trey relax, or Brian, I should say, relax all weekend. Maybe Trey too. Give him some work to do before he goes out here for Memorial Day. And on behalf of Brian and the Rock Lobster, and even Uncle Mike, who couldn't make it, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. If you're listening live, stay tuned. Go get a beverage, take a break. We'll keep you busy if you're listening live as well, because we're going to put some fun stuff in the live stream for you. Maybe talk a little bit of Bollinger Strangles. What the heck is that, huh? I don't know. Let's find out. Or maybe some live open interest, all kinds of good stuff, answering all your questions about that stuff. And we'll be back. I'll be back with the Rock Lobster in exactly 27 minutes to talk some futures options volatility. So stay tuned for that. Otherwise, we'll see you back here, not on Monday, unfortunately, because the markets are closed, but back here next week for this show, The Option Block, and we'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.